Hey there, it's David Stendahl with tonight's deep dive. It is January 31st, 2019. I'm going to do something a little bit different tonight, and what I'm going to do is kind of show something that's on our website, and that's going to be dollar risk. So just some information that's on our site that you should be aware of. And so the way you get to this information is you come to performance and then dollar risk. And then under dollar risk on the right hand side, there's dollar risk breakdown and dollar risk by market. The page that I'm on right now is a breakdown for all of the different markets. And what you'll see is this little bar chart. You're going to see two bar charts per market. Long risk, long dollar risk that is, and short dollar risk. So if you're long the market, believing the market is headed higher, how much risk do you have if it should reverse course and go against you? If you're short the market, believing the market is headed lower, how much risk do you have that the market is headed higher? So long risk and short risk. It just depends upon which side of the market you're on. So if we look at something like crude oil, you're going to see a light colored bar and a dark colored bar. The light colored bar is long risk. So if you're long the market, believing the market is higher, going to head higher, how much risk do you have in a dollar value? Same thing for the short risk. And so what we do is this is a good way to compare all of the markets based upon basically volatility of the market and its normal tendencies during the course of normal trading. And so if you're going to trade a new market you may not have normally traded. So if you're accustomed to trading crude oil, you should expect to have in around $1,200 to almost $500 worth of risk on the long or the short side. And if you trade something like corn, you're going to probably have that. We're going to be around 250 or so for both the long and the short. It just simply gives you perspective if you're going to trade a new market against a market you're already familiar with. Do I normally have higher risk or lower risk for those markets? Is the risk greater on the long side or the short side if I'm going to be trading that market right now? So we update this information every day, so you'll see differences. So again, with crude oil, you can see the long risk is higher or greater than the short risk, but with corn they're pretty close to one another, but the long risk is less than that of the short risk. And so we have a breakdown of conservative, which is what these numbers are, and then we have another outlook for the market. It's something that's a little more aggressive, and these numbers will typically, well, they will be higher. And so what we're looking at is a greater amount of volatility and a higher expectation that that volatility is going to expand. So it gives some perspective whether you have a conservative outlook or an aggressive outlook for each of the two markets as to what theoretically could happen. And rather than just simply do it in an ATR value that is going to be normalized and really not mean too much, what we do is we translate it into basically a dollar risk for that individual market. So we kind of normalize it and give greater perspective on what is actually taking place. Now, the other breakdown that we offer, if you come to performance and you come down to risk and you come down to dollar risk by market, what you would get is a breakdown. I'll just show this to you. It's kind of a big menu here. Let's take a look at crude oil. And you can always take a look at the individual market, and that way you can compare the conservative and the aggressive, the long and the short information on a single page and get specific numbers. As the other breakdown was really just comparison between the markets, but you're kind of eyeing it and trying to figure out what kind of real dollar risk do I have. Well, if you want to get the specifics, you just simply go into the individual market, and you can see on the long side, so you're long the market believing it's headed higher, what risk do I have if the market should go down and go against you? Well, on the conservative side, it's around $700. On the more aggressive side, it's going to be a little over $2,000. And you can see that there's a big difference between that, because if the volatility begins to expand, that $700 could easily grow to $2,000. Again, just to reiterate, if you were short the market, believing the market was headed higher, what kind of a risk do I have if the market should head higher? Well, it's kind of interesting here where we have an expansion between the two. We have a $406 on the conservative, kind of less than that of the other conservative side, but you also on the aggressive side have a higher number than you have here on the other conservative, or excuse me, the other aggressive side. So if you were short the market and the market were to head against you, you could have as little as $460 risk and up to $2,400 worth of risk. Easiest thing to do in using this information is two things. One, obviously there's going to be risk no matter which side you're going to be on, and obviously this will be mitigated by the stops that you might have in your own personal trading. But when we look at this, we just want to look at the volatility of the market and kind of look at worst case scenario per contract. And so what that means is if the market should go against you, whether you're on the long or the short side, how much dollar risk am I actually looking at? And the answer is, if you look at this and you say, I can't handle, if you're to be long the market, I don't think I could handle $700, and I certainly couldn't handle $2,000. Well, that's probably not a market for you to trade. The same thing if you were short the market, or excuse me, long in this case the market and having the short dollar risk. Could I handle $460? Well, maybe I could, but what if the markets were to become very volatile, as we're kind of in that stage right now? It could go up to 2,400. Well, no, I couldn't handle that. So we're trying to put this into normalized terms for traders so they can determine, is this a market I want to trade? How many contracts should I trade? And just simply be realistic with your expectations for the individual markets. So again, we have the detailed information that will give you the specific numbers, and this will change from day to day. We update this every single day. And then we also, as I mentioned, we have this breakdown for either conservative or aggressive, and you can then do a comparison between the markets. And this is some of the tools that we use to sort of normalize things. That obviously if we're trading corn, that is not going to have the same amount of risk if we were trading a single contract in the S&P 500. So what we sometimes like to do is to look at an individual market, typically the S&P 500, and say, if I were to trade the S&P 500, but now I want to trade corn, and I want to have basically the same dollar amount risk, well, how many contracts could I trade? And so we'll look at that on another chart, but you could basically see that it's going to be 4 to 5 times that of corn. So 1, 2, 3, 4, possibly 5. So 4 to 5 contracts to trade corn versus that of the S&P 500, which is listed up here. So it just simply gives you an easy way to compare risk against the individual markets on a per contract basis, and then obviously logically, if you were to trade a market, something you haven't traded in the past, it's a good thing to kind of look at this and get a feel for what kind of legitimate risk, dollar risk, could I be exposed to per contract if I'm going to trade that market. And obviously it changes all the time. And what I like to do is go back and forth between the conservative and the aggressive, just to get a feel for really what kind of a dollar amount risk we're looking at. And with that being the case, it should hopefully give you some perspective and to make you feel a little more comfortable in trading that individual market. It really kind of prepares you to trade those types of markets. So we'll look at some other tools and other things that are up on the website, but at least you know where the dollar risk is for this breakdown for the individual markets, as well as this bigger scope perspective for all of the markets, doing a nice little comparison. So hopefully you enjoyed this type of a segment. I'm going to try to do more of these so that you can get a better feel for some of the content that's up on the site, and basically how you might be able to use it to improve your day-to-day trading. Thanks for watching, and we'll look at some more data in the near term. Thanks very much. Bye-bye.